This is your LMAX Exchange technical update for Wednesday, August 24th, 2016. Euro dollar. So the euro continues to hover above the 100-day moving average, and while above this moving average, there is risk for additional upside into some key internal range resistance in the 114 to 115 area. Ultimately, the market would need to establish above 114.28, that high from the 24th of June, to really put the pressure on the top side and expose a retest of the 2016 high at 1617, going back to May of 2016. Until then, look for the market to stall out at some point over the coming sessions into around 114 and ahead of 115 in favor of the next major downside extension. Right now, on a short-term basis, we would need to see at a minimum a breakback below recent lows at 1271, 1272 to take the immediate pressure off the top side, but overall, the pressure does remain on the downside, and there is risk for another topside failure as this market comes up close to or stalls shy of this key internal range resistance in the 114 to 115 area. Sterling dollar. So cable has seen a nice correction out from recent plus 30-year lows, but this correction should be limited from here and limited to that recent high that we saw around 133.72 in favor of the next downside extension and fresh plus 30-year lows below that recent low around 128 and down towards next key psychological barriers at 125. At this point, only a daily close back above 133.72, that's the high going back to the 3rd of August, would really take the immediate pressure off the downside. Dollar yen. So dollar yen has been in the process of trading lower over the past few sessions, and the market overall is trading within a very well-defined downtrend and is expected to carve out a next lower top, which is seen right now, that next anticipated lower top in the 102.65 area, ahead of a fresh downside extension below the recent June low at 98.99, that's the 2016 low, and towards 95 further down. Only back above that 102.65 high that we saw back on the 8th of August would compromise the immediate bearish momentum for this market. Euro Swiss. Euro Swiss continues to chop around and is confined to a very well-defined range, loosely here between 109.45 and 107.78. A break on either end would really be required for a clear directional insight. Aussie dollar. So Aussie is looking like it's rolling over after stalling out shy of the 2016 high at 78.35. The market has stalled out at 77.58 several days back and could be poised for an acceleration of declines and a resumption of this broader downtrend in Aussie dollar. Look for confirmation, or at least for a strengthening of this outlook, on a daily close back below recent support at 75.84. Dollar CAD. So dollar CAD is showing signs of the formation of a major base despite the setbacks that we saw in recent trade down to 27.64. Look for this area here, 27.64, to now set up a fresh higher low in favor of the next major upside extension beyond some critical resistance, which comes in the form of that 27th of July high all the way up at 132.54. At this point, only back below 127.64 would compromise this outlook. Kiwi dollar. So Kiwi has recently put in a 2016 high at 73.45, but it's looking like this market could be in the process of topping out up here in favor of an acceleration to the downside. Look for a break below recent support, which comes in at 72.09, to really negate this outlook and open an acceleration of declines. At this point, back above 73.45, this recent 2016 high would compromise this toppish outlook and open the door for fresh upside. SPX 500. So the S&P 500 is putting in a record high at this point, a recent record high at 120, right just shy of 2200, and could be in the process of carving out a major top. However, we would need to see a breakback below at a minimum recent support, which comes in around 2167, to strengthen this outlook, and a breakback below 2147 to officially confirm a top and accelerate declines. Until then, there is a risk that the market still wants to trade up and take out 2200 and establish above that psychological barrier. Gold. So gold has mostly been confined to a consolidation over the past several weeks, but the market overall is trading within a more constructive structure and is looking to put in a higher low around 1310 in favor of the next major upside extension beyond the recent 2016 high 1375 and towards 1450 further up. At this point, only back below 1310 would compromise this highly constructive outlook for gold.